This move that we have had is not because somebody or some group is interested in a trade, even as an investment. It is something so much bigger because it overpowered the paper market, which was always slanted against the bullish side of gold. They've been destroyed.
You're watching Silver News Daily. Subscribe for more. Could silver prices really skyrocket to $800 soon? It sounds unbelievable, but current market dynamics and historical trends suggest it might just be possible. Stay tuned as we dive into why silver is on a historic path, what factors are driving this potential surge, and how you could benefit from this unprecedented opportunity. You won't want to miss the critical insights and expert predictions that point to a silver market explosion.
There's still a lot of people that don't believe it, but I'm just saying it again. You cannot have these metals at these prices that have such gains, even though you could argue some costs will come up for mining and what it is. There's so much more profit opportunity now and all. And that people will still go where they think they can make profits. That's why just today I recorded an announcement this morning, Elijah, that basically said, as still as I'm constructive on metals and I still think they're going higher, I think the share part is going to outperform them now because there's so many undervalued situations now, and we're seeing it. We've already seen the majors begin a fairly active M&A. Most recently, people have heard about BHP and Anglo American. We're seeing second-tier ones merging, and we're seeing some of the juniors merge, and also the key to the junior market. We're seeing interest in financings again. They're being bumped up from their original amount without warrants, which is always a good sign. So I think that dark days is behind us. I certainly now feel that, the shares are going to percentage-wise outperform the metals. And like I said, I think it'll be across the board. Let's not forget that just a couple months ago, the world's largest gold mining company, Newmont, broke 30. And I remember speaking on it's called X now. I got to remind myself to call it X on Twitter, and saying under 30 is crazy. This thing was 85. It's the world's largest gold mine. Gold's still 2,100 or whatever it was at the time. You got to own it. And people go, I don't know, there's something wrong. It's 45. So it's up 50%. And, it's pretty good. So overall, to answer your question is, I would actually outweigh myself, no disrespect to your work now, in mining shares than the actual bullion itself. But one thing I want to say, whether, again, talking to a bullion dealer or not, you always need to have some bullion in your portfolio as insurance, because I always say this, you've heard me say it, allow me to say it one more time. When the potential clients come into our planning group and I ask them if they own bullion, and 98 or 99 say, no, we don't. I say, I want you to buy some and hope it doesn't go up. And they all say the same thing. They kind of look first, and then they go, Mr. Granditch, I have to ask, why do you want me to buy something that you think is not going to go up? And I always answer, because if it goes up a lot, what you own a lot of has gone down. And still, most Americans, both in Canada, Canadians and U.S., that I see, are way overweighted in financial assets, and they need to get it in.
Silver prices have been experiencing significant fluctuations recently, capturing the attention of investors and analysts alike. As of the latest data, silver is trading around $31.40 per ounce, having faced both upward momentum and downward pressure due to various market forces. One of the critical indicators to watch is the potential formation of a double top pattern, which could signal a bearish reversal if confirmed. For this pattern to validate, silver would need to drop below key support levels, such as the psychological barrier at $31 and the May 24 high at $30.61, before ultimately breaking below $30. However, if silver manages to reclaim and sustain above the $32 mark, it could pave the way for a retest of the year-to-date high of $32.51, setting the stage for further bullish movement. Recent market behavior suggests a cautious optimism among traders. Despite a modest drop of 0.32% recently, the overall trend has shown resilience, with buyers stepping in to support prices around crucial levels. This indicates that while short-term volatility is expected, the underlying bullish sentiment remains intact. In addition to technical analysis, macroeconomic factors are also playing a significant role. The recent rise in U.S. Treasury bond yields has exerted downward pressure on precious metals, including silver. Yet, geopolitical tensions and economic uncertainties continue to drive safe haven demand, providing a counterbalance to these pressures. Investors should keep a close eye on upcoming economic reports, such as the U.S. Core Personal Consumption Expenditures, PCE, price index, which is a critical measure of inflation. A higher-than-expected reading could further influence the Federal Reserve's stance on interest rates, impacting non-yielding assets like silver. Overall, the silver market is at a pivotal point. While short-term price movements may seem erratic, the long-term outlook suggests a potential for significant gains. As we delve deeper into the factors driving this market, the possibility of silver reaching unprecedented heights becomes more conceivable. Stay tuned as we explore the historical context, industrial demand, economic influences, and much more that could propel silver prices to new records. And don't forget to subscribe to our channel for more in-depth analysis and updates on the silver market.
If you remember when we had some sharp down days, you would bring up the fact people were just calling up to buy. They weren't calling to sell. You would think if the gold is going down $50, $60, which is not a lot now in these days. 100 more would be more equal to one of those paper down days now. But the physical demand has always been there. It wasn't a paper-driven market like gold has been in the past. And so I think there's been a few reasons, and we'll rehash a couple of ones and maybe one or two new ones. The one that was the biggest, that since you and I started talking, is that I'm a big proponent on the BRIC nations and what they're going to lead to. I'm not rooting for them. I'm not somebody who wants to see this happen, but I deal in a world of reality, although Wall Street is full of a lot of people that live in fantasies, but we'll save that for another day. But the bottom line is this movement is real. It's growing. And I keep saying to people, you have to understand, these countries are coming together because they want to discard the United States, not even compete with it. They just want nothing to do with it. They want, in a sense, be able to operate and live off of everything that they can trade among themselves. And the growth of that is going to eventually need some sort of exchange outside of the dollar or even their own currencies. And I have stated that part of this reason is an accumulation led by China, that there's going to be some sort of gold used in some sort of, whether it's digitalized physically against a new currency that's printed or what have you. That's why I still believe this has a ways to go. I don't think we're going to see the same type of percentage gains, and I don't think it's going to go up as fast as it.
To understand the potential for silver to reach $800, it's crucial to examine its historical context and relationship with gold, often measured by the gold-silver ratio. This ratio compares the price of 1 ounce of gold to 1 ounce of silver and has been a reliable indicator of market sentiment and relative value between the two precious metals. Historically, the gold-silver ratio remained relatively stable around 15-to-1 from the late 1600s through the late 1800s. This means that 1 ounce of gold was worth approximately 15 ounces of silver. However, significant shifts began in the 20th century. The price of gold soared due to its safe haven appeal and monetary use, leaving silver behind, primarily valued for its industrial applications. Over the last 120 years, the gold-silver ratio has fluctuated dramatically, ranging from 18 to over 100. For instance, during economic crises and periods of high inflation, the ratio tends to spike as investors flock to gold, perceived as a more stable store of value. Conversely, during times of industrial growth and technological advancement, silver gains ground due to its widespread use in electronics, solar panels, and other industrial applications. The 2008 financial crisis and the COVID-19 pandemic are prime examples of such fluctuations. During the pandemic, the ratio spiked from 65 to nearly 95 within months, reflecting a surge in gold prices while silver lagged. This volatility underscores the complex interplay between these metals and their respective markets. Today, the gold-silver ratio hovers around 80, indicating that silver is relatively undervalued compared to gold. Historically, such a high ratio has often preceded significant price adjustments, where silver catches up to gold's gains. This historical context sets the stage for a potential silver rally, as market corrections and economic conditions could favor a shift towards a lower ratio, boosting silver prices. Moreover, the industrial boom and technological advancements in renewable energy, particularly solar power, have increased silver's industrial demand. This demand, coupled with the historical trend of ratio correction, suggests that silver has substantial upside potential. The historical relationship between gold and silver provides critical insights into their future movements. If the gold-silver ratio trends towards historical norms, silver could see dramatic price increases, potentially even reaching the $800 mark. As we continue our exploration, we'll delve into the industrial demand and other economic factors that further support this bullish outlook for silver.
At least as Russia and China looks at it, and the U.S. is person out. I don't want to get into this. It's always been, and there's a few people that will spend all day on it talking about, does the United States still have all the gold that it's had, and so forth and so on. Whether it does or doesn't, American citizens don't look at gold the same as we're seeing right now in China. Listen, one of the big things that's also driving China's accumulation is retail investors. Retail investors who might have otherwise had been counted on their savings or real estate in China have just overrun the physical demand. That's why there's such a premium over there versus here. And obviously, they're not there for a trade either. This is second nature to them. Americans are still paper. Let's take a flyer. The markets can never fail. The Fed just steps in, and we'll all live happily ever after. But I think the people that are accumulating the gold not only see the world problems, but they see more and more problems in the U.S. I mean, it's getting kind of, listen, I don't normally get involved in politics, but I think this warrants it because of the topic we're talking about. If I'm sitting somewhere outside the United States and I'm watching this president now who's getting to the point where every sentence or two he says is misguided, misquoted, doesn't know where he's walking, doesn't know where he's talking. And then when I look what's in the bullpen, meaning who would replace him right now if something happened, I think I would want to own some gold too. I mean, it's really, really concerning. And that's not because I'm a Trumpster. Everybody thinks as soon as you say that, it's because you want to see Trump win. I'm just looking at what we have to deal with. And I think quietly behind the scenes, especially how we double-faced ourselves with Israel, that if you're a so-called ally of the United States, you have to ask yourself, are we next? Are we the next to be thrown under the bus? How we left Afghanistan, how we said one way one day about Israel, the next day we're saying this and all. It's very, very, I think this is the best way to put it. Up until a couple of years ago, the financial service industry in the United States, especially those without the gray hair or no hair, paid little regard to geopolitics. They didn't think it had or will have any impact on the financial arena. That is clearly not the case, and is going to play more of an impact on us. And again, I'll just point out to the fact that more and more countries around the world are looking to move away from the United States and the US dollar, and everything that we say and do is not a bullish factor for US markets if you're someone that still invests for years and not hours, days, and weeks.
One of the most compelling factors driving silver's potential price surge is its extensive industrial demand. Unlike gold, which is primarily used for investment in jewelry, silver has a wide array of industrial applications that significantly influence its market dynamics. Understanding these applications is key to appreciating why silver could see its price skyrocket to $800. Key industrial applications: electronics. Silver's exceptional electrical conductivity makes it indispensable in the electronics industry. It is used in a variety of electronic devices, from smartphones and tablets to circuit boards and connectors. As the world becomes increasingly digital, the demand for these devices, and consequently for silver, is continuously rising. Solar panels. One of the most significant drivers of silver demand in recent years has been its use in photovoltaic (PV) cells for solar panels. Silver's high conductivity and reflectivity enhance the efficiency of solar cells, making it a critical component in the production of solar energy. With global initiatives pushing for greener energy solutions, the demand for solar panels is expected to grow exponentially, thereby boosting silver consumption. Automotive industry. The automotive industry, particularly the electric vehicle (EV) sector, relies heavily on silver. It is used in various components, including electrical systems, battery connections, and vehicle infotainment systems. As EV adoption accelerates globally, the automotive industry's demand for silver is poised to increase significantly. 5G infrastructure. The rollout of 5G technology represents another major demand driver for silver. The metal is used in the production of 5G infrastructure, such as antennas and semiconductors, which are essential for the new network's implementation. As 5G networks expand, the demand for silver in this sector is expected to surge. Medical applications. Silver has well-documented antibacterial properties, making it valuable in medical applications. It is used in wound dressings, medical devices, and even in coatings for hospital surfaces to prevent infections. The ongoing advancements in medical technology continue to find new uses for silver, thereby driving demand. Impact of industrial demand on silver prices. The interplay between industrial demand and silver prices is profound. During periods of technological advancement and economic growth, the industrial demand for silver can lead to significant price increases. For example, during the tech boom of the early 2000s and the green technology surge in recent years, silver prices saw substantial upticks. Moreover, the COVID-19 pandemic highlighted the importance of silver in medical applications and its role in new technologies. As economies recover and continue to invest in technological infrastructure, the industrial demand for silver is likely to remain robust. Supply constraints. Adding to the bullish case for silver is the issue of supply constraints. The silver market has faced production challenges, with several major mines experiencing output reductions due to various factors, including environmental regulations and labor shortages. The combination of rising industrial demand and constrained supply creates a favorable environment for significant price increases. In conclusion, silver's extensive industrial applications and the growing demand across multiple high-tech sectors underscore its potential for a dramatic price increase. As we continue our exploration, we'll examine the economic and geopolitical factors that further support the argument for a historic silver price surge.
To see something that at the end of 2021, I took a most unusual stance for anybody that works in the general financial service industry, which I still do. I said that I really thought gold was such a capital gains opportunity that it would outperform stocks and bonds. And by the end of 2021, that you should be out of stocks and bonds and own gold. And like, I don't think 0.2% people did that. Okay. And it's a little bit of a pat on the back, but gold's tripled the return that the stock market made, and much, much more, because bonds have actually lost like 20-something% since then. And as I've always spoken to you, and respecting what you do for a living and all, my primary concern about gold first was as a capital gains, and then secondary as something as an alternative to paper currencies, which obviously I feel are all going to have problems in a world that's awash in a debt spiral. And for both those reasons, 25.36 was my target from almost half of that price. I believe it's almost, you don't want to say certainty, but it's fairly certain that even if there is a little correction before we get there, that number is not astronomical anymore to people. In fact, it's become very common and interesting enough, Elijah, outside of the bullion industry, not just people that are involved in it, people that talk about mining stocks, but I'm actually seeing non-normally metals oriented people talking about it because they came to this conclusion. And let me just run on here a little because I think it's probably the importance of the day. This move that we have had is not because somebody or some group is interested in a trade, even as an investment. It is something so much bigger because it overpowered the paper market, which was always slanted against the bullish side of gold. They've been destroyed. I mean, if they stayed in, they've been destroyed. And where that's most pronounced, and I don't think people, and again, I'm going to do a little self-pat on my back again, but a couple of months ago, I said that when copper was just under 4, it became my favorite metal. If you remember, more than even gold. Copper moved 25% in less than 2 months. That's like gold moving $600 and the Dow Jones Industrial Average going up 10,000 points. And the reason I say that, partly the glow, but also the point that when you have moves like this, there's something beyond normal taking place, something dramatic. And that's probably what, we could discuss a little bit more, what some of the possibilities are.
Economic and geopolitical factors play a significant role in influencing silver prices. Understanding these influences is crucial in appreciating why silver might be on the brink of a historic price surge to $800. One of the primary economic factors affecting silver prices is inflation. As inflation rises, the value of fiat currencies typically declines, leading investors to seek refuge in tangible assets like silver. Historically, during periods of high inflation, precious metals have served as effective hedges. The current economic environment, marked by persistent inflationary pressures, suggests a favorable scenario for silver as a store of value. The Federal Reserve's monetary policy, particularly its stance on interest rates, significantly impacts silver prices. Higher interest rates generally lead to a stronger dollar, which can suppress silver prices. Conversely, lower interest rates tend to weaken the dollar and increase the appeal of non-yielding assets like silver. The Fed's recent indications of maintaining higher interest rates to combat inflation have created a complex backdrop, but ongoing economic uncertainties might still favor silver investment. Economic growth drives industrial demand for silver, especially in sectors like electronics, renewable energy, and automotive. As global economies recover from the pandemic and continue to invest in infrastructure and technology, the demand for silver in these industrial applications is expected to rise, supporting higher prices. Geopolitical tensions, such as conflicts in the Middle East, tensions with China, and the ongoing war in Ukraine, create uncertainty in global markets. During such times, investors flock to safe haven assets like silver to protect their wealth. Recent escalations in geopolitical conflicts have contributed to increased volatility in financial markets, driving up the demand for silver. Trade policies and tariffs can also influence silver prices. For instance, tariffs on imported metals or trade disputes between major economies can disrupt supply chains and affect the availability and cost of silver. The ongoing trade tensions between the U.S. and China, as well as other international trade disputes, can impact silver markets by creating supply uncertainties and affecting industrial demand. Global economic policies, including fiscal stimulus measures and infrastructure spending, can have a direct impact on silver demand. Policies aimed at promoting green energy, such as investments in solar power and electric vehicles, boost industrial demand for silver. Governments worldwide are increasingly committing to renewable energy initiatives, which is expected to drive significant demand for silver in the coming years. During the 2008 financial crisis, silver prices surged as investors sought safe haven assets amidst the economic turmoil. The crisis underscored silver's role as a protective investment during periods of economic instability. The COVID-19 pandemic further highlighted silver's dual role as an industrial and investment asset. The initial economic shock led to a surge in safe haven demand for silver, while the subsequent recovery and focus on green technologies boosted industrial demand. Recent geopolitical events, such as the Russian invasion of Ukraine, have increased market volatility and driven up demand for safe haven assets like silver. The ongoing uncertainty and potential for further geopolitical disruptions continue to support higher silver prices. In summary, the interplay between economic and geopolitical factors creates a dynamic environment that can significantly influence silver prices. Rising inflation, economic growth, geopolitical tensions, and supportive global policies all contribute to a bullish outlook for silver. As we delve deeper into the specific market dynamics, the case for silver reaching $800 becomes even more compelling.
But this is only evolving in with us now. The other thing that's transpiring, and it has to do more with some of the more base metals, is that there's a real shortage of metals in the world. We basically had 12-year bear market in the mining and exploration business. It peaked in 2011. It had a little bit of pop in 2016 and 2020. But basically, we've not seen large-scale exploration done in the world for a variety of metals. Yet the don't worry, be happy crowd that lives on Wall Street and the financial media attached to their hips tell us all about these great things that are still coming: electric vehicles, electrification, AI. Well, first of all of that needs electricity. We are going to have problems again this summer to meet our current electrical needs with brownouts and blackouts. And I like to joke, Elijah, but I'm not too far away. If you talk to people in the industry, some of the equipment is so old, I joke that Thomas Edison installed it. So, there's still going to be a big need for these metals, even though the prices have moved quite a bit. But the gold is a separate identity. It's for 2,000 plus years. It's been used. It's served its purpose. That's why we're getting all the battles with the crypto nuts and all that kind of stuff. And they still may have their day, and there still may be something that they share in. But to think that that thing was going to take over and gold was going to disappear and all, it's proven yet again that when things get troublesome and things work out, they're not working out, gold still performs well. And I think you minimally have to, and whether I was speaking to a bullion dealer or a bond dealer, I would say the same thing. I've always said you have to own gold just like you have insurance. People have car insurance. They have home insurance. They're not looking for their car to be stolen. They're not looking for their home to have a fire or something bad, but they want something to offset it there. And there's clearly, underlined clearly, a variety of reasons that you and I can talk to midnight and not cover nearly all of them, why you need to be concerned about fundamental things that are happening here and abroad.
Silver's potential to reach $800 is bolstered by the current supply-demand dynamics, particularly the ongoing supply shortages. The silver market has faced significant production challenges, creating a structural deficit that is influencing prices. The Silver Institute's recent report highlights a decrease in total silver supply due to production losses at major mines. For instance, the Penasquito mine, one of the largest silver producers, has experienced notable output reductions. This decline in production has been exacerbated by environmental regulations and labor shortages, further tightening the supply. On the demand side, industrial demand for silver continues to surge, reaching all-time highs. The growing need for silver in photovoltaic solar cells, driven by the global push for renewable energy, has been a significant factor. Despite slight dips in jewelry and silverware demand, the booming industrial sector has more than compensated, pushing overall demand higher. Global supply remains roughly 1 billion ounces annually, while physical silver demand exceeds supply by approximately 20% per year. This consistent shortfall has resulted in a market deficit for 3 consecutive years. In 2023, for instance, global silver demand reached a record high of 654.4 million ounces, primarily due to increased usage in industrial applications, especially in the green economy sector. Industrial demand alone surged to 445.1 million ounces, with the photovoltaic market witnessing a substantial 64% increase from the previous year. Despite these strong demand figures, global silver mine production dipped by 1% to 830.5 million ounces in 2023, contributing to the ongoing market deficit. Silver recycling grew by only 1% to 178.6 million ounces, accounting for 18% of total supply. But this marginal increase was not enough to offset the decline in mine production. Investor demand for silver has also played a crucial role. After accounting for non-investment demand, only about 123 million ounces were left for silver investors. In a world where trillions circulate in investment markets, this limited pool, valued at less than $3 billion, raises eyebrows. The reality is that the available silver for investors is a fraction of the total silver produced, creating a tight market. The ongoing supply shortages and rising demand suggest that the silver market is poised for significant price increases. The dynamics of supply and demand will inevitably drive prices higher, especially as industrial and investment demand continue to grow. The structural deficit in the silver market underscores the potential for a dramatic price surge, supporting the case for silver reaching $800. As we move forward, we'll explore the market sentiment and investor behavior that further contribute to silver's bullish outlook. The interplay of these factors continues to paint a compelling picture of silver's future, making it a potentially lucrative investment opportunity.
Look at a crystal ball long enough, all we do is become an expert at how to eat a lot of broken glass. So I stopped making prognostications when I not only lost millions once, but twice over a 40-year span. I will say this with great idea of confidence. Obviously, I bet this. I don't think we're in the 5th or 6th inning. Maybe we're halfway through this metals move. I don't know what numbers. Let me put it this way. If you told me, Pete, I got in a time machine and I went a year from now or even 18 months from now and gold's 5,000 or it's 4,000 to 5,000, I will tell you whatever concerns we have politically and socially got 10 times worse, because that would be one of the main driving factors for that. What I will just say to you, what I said earlier, I think the risk reward now is becoming more balanced. It was all reward. That's why we're so aggressive in them. But like I said, the next 20% still looks up, not down. And I would think silver for numbers 35, 40, I'll feel good when gold hits. Listen, it's 10 years. And people always say, Pete, in the last couple of weeks, how did you come up with 25, 36? If you remember, perhaps when we first met, I brought it up. But before that, gold had formed over 10 years what's called a cup and handle technical formation. The cup was already done and the handle was being formed. And from a technical standpoint, if you take the figuration of how long it was, the percentage, and multiply it 8 out of 10 times, cup and handles break out to the upside, not to the downside. Obviously, this was one of the 8 times it did. The number it came to was 2536. That's where that number comes from when I quote it. Whether we get to 2535 and I go, darn it, I'm not going to be too concerned about that, because I can tell you just a few years ago when gold was breaking back to 1600, go check the media reports back then. 1,200, it's 1,000, it's over. You know it. You were in the business at that time. And in just a few years' time, it's up 50%.
Investor sentiment and behavior play a crucial role in determining silver prices, and recent trends indicate a growing bullish sentiment toward this precious metal. Understanding how investors are reacting to current market conditions can shed light on why silver could be on the path to $800. Over the past few years, there has been a noticeable shift in how both institutional and retail investors perceive silver. Traditionally, gold has been the go-to asset for those seeking a safe haven, but silver's dual role as both an industrial and precious metal has attracted increasing attention. The market turbulence caused by the COVID-19 pandemic accelerated this trend, as investors sought to diversify their portfolios and hedge against economic uncertainties. Institutional investors, in particular, have significantly increased their exposure to silver. Large-scale buying by exchange-traded funds, ETFs, has been a major driver of silver demand. These ETFs purchase physical silver to back their shares, effectively removing large quantities of silver from the market. This buying spree has tightened supply even further, contributing to price increases. Retail investors have also shown a growing interest in silver, spurred by social media campaigns and a collective awareness of silver's potential. The Silver Squeeze movement, inspired by retail investors on platforms like Reddit, aimed to drive up silver prices by encouraging mass purchases of physical silver and silver-backed assets. This grassroots effort highlighted the power of coordinated retail investor action and brought silver into the spotlight. Market sentiment surveys and investor reports reflect a growing optimism about silver's future. Many investors view silver as undervalued compared to gold, considering the historical gold-silver ratio. With the ratio currently hovering around 80-1, there is a strong belief that silver has substantial room to grow and could narrow this gap. Additionally, the speculative nature of silver trading has attracted investors looking for high returns. Silver prices tend to move more rapidly than gold due to its lower price and higher volatility. This characteristic makes silver an attractive asset for speculative traders who thrive on market swings. However, it's not just speculative interest driving the market. Long-term investors are also recognizing silver's potential as a hedge against inflation and economic instability. The ongoing fiscal stimulus measures and increasing debt levels in major economies have raised concerns about future inflation. Silver, with its historical performance as a hedge, is becoming an essential part of diversified investment strategies. Investors are also paying close attention to silver's industrial applications, which offer a compelling growth story. The demand for silver in technology, renewable energy, and medical applications provides a strong foundation for long-term price appreciation. As these industries expand, silver's industrial demand will continue to rise, supporting higher prices. Overall, the growing bullish sentiment and increasing investor interest in silver are crucial factors supporting the case for a dramatic price surge. As more investors recognize silver's potential and allocate a portion of their portfolios to this precious metal, the upward pressure on prices is likely to continue. This positive sentiment, combined with the other factors we've discussed, paints a compelling picture of silver's future and its potential to reach $800.
Basically about the same. But what has continued is less and less usage worldwide as the reserve currency continues. And, you know, this thing about de-dollarization and the talk about it is, it's happening every day. It's not just fly by night. And we know that the BRICS are again meeting this fall. There's more and more talk that there's be a lot more involvement of countries. And I think we're going to learn some more about how they plan on doing all this. Whether it's everything that's going to come out, probably not. But all these things play into a role of why the physical market, and that's another important point we talked about at the onset, and let's not lose sight of it. It's not a coincidence that when the paper market moved out of London and New York as the only places and dominated the value put on gold each day and moved to the East, especially Shanghai, that has also led to less raids or whatever people want to term it all. And in the last couple of weeks, because you watch it closely like I do intraday, we saw moves where it would suddenly fall $20 or $30. And in the old days, not only would that go, but it would go lower. And it would take days or weeks to rebound. It rebounded in a few minutes. If I'm one of those shorters, if they still exist out there, and if they're still able to breathe because they've been crushed if they stayed in this, I'm thinking maybe the time has passed. It may be something for me to look some other place because I don't think they have the influence that they have anymore. And that is another key factor because you and I knew for a lot of years, you've been in the business, your family, Miles Franklin, been around a long time. We saw when paper markets were getting crushed, people were just, can I get more gold? It didn't match what was happening. And that was an important part to take out because that's been a fear of some people. Oh, I don't want to get, because they always come and hammer it. And there's still going to be people saying that.
Technical analysis plays a vital role in predicting potential price movements in financial markets, and silver is no exception. By examining silver's recent price patterns and key technical indicators, we can gain insights into its potential path towards $800. One of the most discussed patterns in the current silver market is the double top formation, which typically signals a potential bearish reversal. This pattern is formed when prices reach a high retreat and then rise again to a similar level before falling back once more. For silver, this pattern would need to see a break below key support levels to confirm a bearish trend. The crucial levels to watch include the psychological barrier at $31, the May 24 high at $30.61, and ultimately the $30 mark. If silver prices fall below these levels, it could validate the double top pattern, indicating a potential decline. However, the bullish case remains strong if silver can reclaim and sustain above the $32 level. Such a move would pave the way for a retest of the year-to-date high of $32.51. Breaking through this resistance could trigger further buying interest, propelling silver towards higher levels. This scenario would invalidate the double top pattern and support the bullish outlook. Momentum indicators like the Relative Strength Index, RSI, provide additional insights into silver's price dynamics. Currently, the RSI is hovering near overbought conditions, suggesting that the market has strong upward momentum, but might need a period of consolidation before continuing higher. If the RSI remains elevated but stable, it indicates sustained buying interest and supports the case for a continued rally. Another important technical factor to consider is the moving averages. Silver's price relative to its 50-day and 200-day moving averages can offer clues about the overall trend. Currently, silver is trading above both its 50-day and 200-day moving averages, which is a bullish sign. When the shorter-term moving average crosses above the longer-term moving average, known as a golden cross, it typically signals a strong bullish trend. If this pattern holds, it could provide further impetus for silver prices to climb. Volume analysis also sheds light on market sentiment. Increased trading volume on up days suggests strong buying interest, which is necessary for sustaining a rally. Observing volume spikes during price increases can confirm the strength of bullish moves. Recently, higher volumes have accompanied silver's upward price movements, indicating robust demand and supporting the bullish scenario. Fibonacci retracement levels are another useful tool in technical analysis. These levels, derived from key price points, help identify potential support and resistance areas. For silver, the key Fibonacci retracement levels to watch include the 38.2%, 50%, and 61.8% levels of its recent price movements. These levels often act as significant barriers or support zones where price corrections may occur before resuming the prevailing trend. Additionally, trend lines drawn from historical price data can provide insights into potential support and resistance areas. Silver has been trading within an upward channel for some time, with higher highs and higher lows defining its path. As long as silver remains within this channel, the overall trend is considered bullish. A breakout above the upper trend line of this channel could signal an acceleration of the bullish trend, pushing prices towards new highs. In conclusion, technical analysis of silver suggests a promising outlook. Key indicators and patterns support the potential for significant price movements. If silver can maintain its current momentum, break through resistance levels, and invalidate bearish patterns, it could pave the way for a historic rally towards $800. As we continue our exploration, we'll delve into how silver's potential compares to other precious metals and why it might outperform them in the near future.
Okay, and now you have to ask yourself, who's going to end up being the smarter person, the person in China or the retail person here? That answer is yet to be seen. But I would tell you that with all the things that you and I discuss and other things we can, the more likelihood is the next $1,000 move in gold. And I'm not saying it's going to 3,500, but I think gold had more of a chance of being 3,500 than it does having being 1,500 again. And so if people are selling, and don't get me wrong, I have people that bought gold as low as 12 or 1,300. And when it got to 2,400 and all, I said, listen, there's nothing wrong with taking 5 up to 25%. The good news for them is it was, hey, listen, take it and put it in copper. And some that did it, they're retiring now. Of course, I didn't do it. I don't follow my own advice. But people that did very, very well. So it's okay. You know, I know that people saying, well, this is very suspicious. Why aren't the gold funds and all? Well, listen, that's all part of how people miss major bull markets and eventually cave in at the end. Quite frankly, because it's been this way, Elijah, I would start to get nervous if you were telling me here, Pete, in the last 2 weeks, they're knocking. I can't even wake up. They're outside knocking on the door wanting to get some. We'd be closer to the end of the move. So I'm not concerned about U.S. or North American based. I'd be very concerned if we start to see a significant drop off out of Asia and China for physical.
Comparing silver's potential price movement to that of other precious metals, particularly gold, highlights why silver might outperform in the near future. Understanding the dynamics between these metals provides valuable insights into the unique opportunities that silver presents. Historically, gold has been the more stable and expensive precious metal, often serving as a benchmark for silver. The gold-silver ratio, which measures the price of 1 ounce of gold relative to 1 ounce of silver, has been a critical indicator in understanding their relationship. Over the past century, this ratio has fluctuated widely, reflecting the varying demand and supply dynamics for each metal. Currently, the gold-silver ratio stands at around 80-1, suggesting that silver is undervalued compared to gold. This high ratio indicates that silver has substantial room to appreciate relative to gold. Historically, such disparities have often preceded significant upward adjustments in silver prices. For instance, during periods of economic recovery or technological advancement, silver has outperformed gold due to its dual role as both an industrial and precious metal. One of the key reasons why silver might outperform gold in the near term is its extensive industrial demand. Unlike gold, which is primarily used for investment in jewelry, silver is a critical component in various high-growth industries. The ongoing expansion of renewable energy, particularly solar power, significantly boosts silver demand. Silver's superior conductivity makes it indispensable in photovoltaic cells used in solar panels, positioning it as a vital material in the global push for greener energy solutions. Additionally, the growing adoption of electric vehicles, EVs, and the rollout of 5G technology are major drivers of silver demand. The automotive industry relies on silver for various components, including battery connections and electrical systems. As the global transition to EVs accelerates, the demand for silver is expected to rise correspondingly. Similarly, 5G infrastructure requires significant amounts of silver for antennas and semiconductors, further supporting its industrial demand. Gold, while benefiting from its safe haven status and monetary uses, does not have the same level of industrial applications. This distinction gives silver a unique advantage in times of technological advancement and industrial growth. As these sectors continue to expand, silver's industrial demand is likely to outpace that of gold, driving its prices higher. Moreover, silver's price volatility often attracts speculative interest, which can lead to rapid price movements. Silver prices tend to be more volatile than gold due to its lower market capitalization and higher sensitivity to industrial demand changes. This volatility can result in significant gains during bullish market conditions, making silver an attractive asset for traders seeking high returns. In recent years, there has also been a surge in investor interest in silver, driven by its perceived undervaluation and potential for high returns. The rise of silver-focused exchange-traded funds, ETFs, and the increased participation of retail investors have contributed to the upward pressure on silver prices. The silver squeeze movement exemplified this trend, where coordinated buying by retail investors highlighted silver's potential for rapid appreciation. Comparing silver to other precious metals like platinum and palladium further underscores its unique position. While platinum and palladium have specific industrial uses, particularly in the automotive sector for catalytic converters, their demand is not as broadly diversified as silver's. Silver's extensive applications across various industries give it a more robust demand profile, supporting its long-term price potential. In conclusion, silver's combination of undervaluation relative to gold, extensive industrial demand, and increasing investor interest positions it for potential outperformance. As we continue to explore silver's market dynamics, we'll delve into expert predictions and future valuations that further support the case for a significant price surge. Stay tuned for more insights on why silver could be one of the most lucrative investments in the coming years.
If I can put an asterisk there, we are in such different times now than it existed 20, 30, 40 years ago. The market has nothing in common when I first put my hat on 40 years ago. So ratios that worked 40 or 30 years ago may not be as effective or as useful now because so many things have changed to make up what's happening with those things that make up the ratio. It's the same as I try to tell the people like me with gray hair or no hair, 60s, 70s, that playing the market 40 years ago, the stock market is nothing like what it once was. When I started, Elijah, 90% of the trading was individuals. I don't think individuals make up 10% of the trading now. So same thing with the ratio, but the good news is all the metals, all the key metals, gold, silver, platinum, even palladium, even nickel and things like that, they all still have very bullish, constructive, fundamental and technical factors that strongly suggest we're not anywhere near the ultimate top in this.
As we look to the future, expert predictions and analyst insights provide compelling evidence for silver's potential to reach unprecedented heights. Let's examine what industry experts are saying about silver's trajectory and how their forecasts support the case for a dramatic price surge. The World Bank has projected that silver prices will average around $21 per ounce through 2023, reflecting a conservative outlook. However, less mainstream analysts and silver market enthusiasts are much more bullish. For instance, some analysts predict that silver could reach as high as $92 per ounce by the end of 2027. This optimism is driven by silver's growing industrial demand and the ongoing economic and geopolitical uncertainties that favor precious metals as safe haven investments. Keith Neumeyer, CDO of First Majestic Silver, has been one of the most vocal advocates for silver's potential. In a 2022 interview, he projected that silver prices could top $130 per ounce in the future. Neumeyer bases his predictions on the increasing industrial demand for silver and the persistent supply deficits. His insights align with the broader market view that silver's dual role as an industrial and precious metal uniquely positions it for significant gains. Other industry experts point to the structural supply shortages in the silver market as a critical driver for future price increases. The Silver Institute's data reveals a consistent annual supply deficit, with demand outstripping supply by approximately 20%. This persistent deficit, coupled with the increased industrial usage in sectors like electronics, solar power, and electric vehicles, creates a strong foundation for rising prices. Moreover, geopolitical tensions and economic policies continue to create a favorable environment for precious metals. Investors seeking to hedge against inflation and economic instability are increasingly turning to silver. The ongoing trade tensions, particularly between the U.S. and China, and the geopolitical uncertainties in regions like the Middle East and Eastern Europe, have heightened market volatility. This volatility often drives investors towards safe haven assets, further boosting silver demand. Additionally, central banks around the world have been increasing their gold reserves as part of their monetary policy strategies. While this directly affects gold, it indirectly benefits silver. As gold prices rise due to increased central bank purchases, silver often follows suit due to its historical correlation with gold. This trend is expected to continue, providing further support for silver prices. The growing adoption of silver in green technologies also supports a bullish outlook. The global push towards renewable energy sources, particularly solar power, is expected to drive significant demand for silver. The photovoltaic sector, which uses silver in solar panels, has seen exponential growth. As countries commit to reducing carbon emissions and transitioning to greener energy, the demand for silver in solar applications is projected to rise sharply. Analysts also highlight the potential for a breakout in silver prices due to speculative interest. The speculative nature of silver trading means that prices can move rapidly in response to market sentiment. This volatility attracts traders looking for high returns, creating the potential for sharp price increases during bullish periods. In summary, the expert predictions and market analyses present a strong case for silver's potential to reach $800. The combination of industrial demand, supply shortages, geopolitical uncertainties, and speculative interest creates a perfect storm for significant price appreciation. As we move towards the conclusion, it's clear that silver's future looks incredibly promising. Next, we'll explore the final step, where we'll summarize the key factors and present a compelling conclusion that ties everything together. Let me know if you'd like to proceed or if there are any adjustments you wish to make to this section.
Or not, buy the things that are going to provide electricity and all. I mean, all these transformers, lines, all these things that are going to be made and so forth, and the metals that are needed for it. That's why copper still has a lot of bright future. Now, I don't think it's going to 10 or 12. This guy's talking about that. But clearly a sustained price above 5 will become apparent, and that will afford opportunity for people that explore for it, develop it, and mine it, and also products that are going to be needed to keep providing things in the world. Let me leave you with this. If I was 10 years younger or a lot younger like you are, one of the things that's going to become crisis, which isn't spoken yet, is the usage of water. Not only the sharing of it from farming and elsewhere, but for actually drinking purposes and survival purposes. And it's probably the most acute problem out there that doesn't get a lot of talk, even though everybody talks about climate change, but they don't talk about the most necessity thing we need in the human race, and that's water.
Then where do you think that will be going in the future?
If I was 10 to 15 years younger, I'd be trying to figure out who are the people that control it, because a lot of that's happened now where people are controlling aquas, either it's governments or private people. There are a lot of people that eventually feel that we're going to have to use salt water eventually as drinking water. There are countries, Israel and a few others, that do it. It's hard for us to imagine that still here. But actually, the usage of water for just main drinking purposes. Listen, that's always been a crisis in some countries like Africa and all. And you would be very hard in Canada because everywhere you look, there's a lake. But the bottom line is water is becoming more of a needed commodity. And it's very, very important in mining. You basically can't mine, especially certain types of metals, without proper water. And again, if I was a lot younger, I would spend more time researching public companies that would be involved in some way. But I'm going to go out on the twilight of my career in the metals and mining shares. It's something I've known about in 30 or 40 years. I've identified a couple of people that are even a lot smarter than me. And that's where the last few years of this career of mine will be spent.
Can you maybe give us a forecast of what you see for the rest of the year in both gold and silver?
Well, I like to say, Elijah, and you know this,
Investor interest in silver has been growing, driven by its unique combination of industrial demand and investment appeal. The rise of social media and online investment communities has played a significant role in increasing awareness and participation in the silver market. Platforms like Reddit have seen movements like the silver squeeze, where retail investors collectively drive up silver prices by purchasing large amounts of physical silver and silver-backed assets. This grassroots movement highlighted silver's potential for rapid appreciation and brought significant attention to the metal. Institutional investors have also been increasing their exposure to silver, with exchange-traded funds, ETFs, purchasing large quantities of physical silver to back their shares. This has effectively removed significant amounts of silver from the market, tightening supply and contributing to upward pressure on prices. The ongoing accumulation of silver by ETFs and other institutional investors reflects a growing recognition of silver's potential as a valuable asset in diversified portfolios. Market sentiment surveys and analyst reports indicate a strong bullish outlook for silver. Many investors view silver as undervalued compared to gold, considering the historical gold-silver ratio. With the ratio currently around 80-1, there is a widespread belief that silver has substantial room to appreciate relative to gold. Historically, such high ratios have often preceded significant upward adjustments in silver prices. Speculative interest in silver is another key factor driving its potential price surge. Silver's price volatility attracts traders looking for high returns, and this speculative nature can lead to rapid price movements. Silver prices tend to be more volatile than gold due to its lower market capitalization and higher sensitivity to changes in industrial demand. This characteristic makes silver an attractive asset for speculative traders who thrive on market swings. Long-term investors also see silver as a hedge against inflation and economic instability. The ongoing fiscal stimulus measures and increasing debt levels in major economies have raised concerns about future inflation. Silver, with its historical performance as a hedge, is becoming an essential part of diversified investment strategies. As more investors allocate a portion of their portfolios to silver, the demand is expected to increase, further supporting higher prices. The unique properties of silver and its extensive industrial applications provide a strong foundation for its future growth. The demand for silver in technology, renewable energy, and medical applications is expected to continue rising, supporting long-term price appreciation. As industries expand and innovate, silver's role as a critical component in various high-tech sectors will only become more pronounced. The comparison between silver and other precious metals, such as gold, platinum, and palladium, further underscores silver's unique position. While gold benefits from its safe haven status and monetary uses, silver's extensive industrial applications give it a distinct advantage. Platinum and palladium have specific industrial uses, particularly in the automotive sector, but their demand is not as broadly diversified as silver's. Silver's diverse applications across various industries provide a more robust demand profile, supporting its long-term price potential.
Well, I'm going to differ a little with you, Elijah. I don't think the market has rised that much. If you look over the next year or so, first of all, as I pointed out, since January 1st, 2022, gold's up 33%, the S&P's up 11%, and the bonds are down double digit. If you look over the last 2 years, from where the S&P went down and went up to, it's less than a 10% gain. And if you start to look into the whole market, the value line index and what have you, some averages are actually down over 2 years. So I don't think it's as much that everything is going through the roof. Sure, it's at its highest levels, but it hasn't come close to making the gains. Even that other thing called, cryptocurrencies, and everybody, oh, look at Bitcoin. All right. Bitcoin a couple of years ago got to 70,000, went down, got back up to 70,000, hovering near there. But what has it really done in 2 years? Look what gold's done in 2 years. Look what silver has done, and look what copper has done. So I think the misnotion, the relics, us dinosaurs that live with the relics, that is where it's been. And until that changes a lot, and those type finally come in, it still has a ways to go. It's just a normal way of mankind and human thinking. And I'm not happy for you that people aren't knocking your door down, but it actually makes me feel good in a sense that because if everybody and the mother started to buy Bullion, the crowd as self never wins. It wins early on and towards the end, but then most stay too late, and then the rug gets pulled out on them. And I just still think that the metals and things related to metals, and let me make one other point, if I may. Give you an example. Right now on Wall Street, nothing's hotter than artificial intelligence. Companies, that have it, everybody's talking that we're going to it. Okay, let's buy into it. Still, a lot of people on Wall Street went to cryptocurrencies. Everywhere you turn, there's a crypto person, 250,000 is going to 500,000, going to 1 million and all. Well, even if they're correct, the usage of that requires an unbelievable amount of electricity that we are in no position as a country or a world to provide. So my argument would be is instead of running into those things which may be risky.
While this may seem like an ambitious target, the convergence of these factors suggests that such a scenario is not entirely out of reach. Silver's ongoing supply deficits have created a market environment where demand consistently outpaces supply. This structural shortage is a critical driver of future price increases. The Silver Institute's data reveals that the global demand for silver, particularly in industrial applications, has been steadily rising, while mine production has struggled to keep up. This imbalance sets the stage for significant upward pressure on prices. The growing industrial demand for silver is another key factor supporting a bullish outlook. Silver's unique properties make it indispensable in various high-growth sectors, including electronics, solar energy, and electric vehicles. The global push towards renewable energy and green technologies is particularly noteworthy. As countries commit to reducing carbon emissions and investing in sustainable energy solutions, the demand for silver in photovoltaic cells and other green technologies is expected to soar. Economic factors such as inflation and monetary policy also play a crucial role in driving silver prices. Inflation erodes the value of fiat currencies, prompting investors to seek refuge in tangible assets like silver. The Federal Reserve's stance on interest rates and ongoing economic uncertainties further enhance silver's appeal as a hedge against inflation and economic instability. Geopolitical tensions and global economic policies add another layer of complexity to the silver market. Conflicts, trade disputes, and geopolitical uncertainties create volatility in financial markets, driving investors towards safe haven assets like silver. The ongoing geopolitical tensions, particularly in regions like the Middle East and Eastern Europe, contribute to market volatility and support higher silver prices. Investor sentiment and market behavior significantly influence silver prices. The rise of retail investor movements, such as the silver squeeze, and the increasing participation of institutional investors have brought significant attention to silver. Exchange-traded funds, ETFs, that purchase physical silver to back their shares have effectively tightened supply and contributed to price increases. The growing recognition of silver's potential among investors further supports its bullish outlook. Technical analysis of silver's price patterns and key indicators also points to the potential for significant price movements. Patterns like the double top and key resistance levels, combined with momentum indicators and volume analysis, provide insights into future price trends. The current technical setup suggests that silver has strong upward momentum, with potential for further gains if key resistance levels are breached. Comparing silver to other precious metals, particularly gold, highlights its unique advantages. While gold remains a staple and valuable asset, silver's extensive industrial applications give it a distinct edge. The gold-silver ratio, currently around 80:1, indicates that silver is undervalued relative to gold, suggesting substantial room for appreciation. Historical trends support the view that silver could experience significant price increases as the ratio normalizes. In conclusion, the convergence of supply shortages, rising industrial demand, favorable economic and geopolitical factors, positive investor sentiment, and technical indicators all support a bullish outlook for silver. While reaching $800 may seem ambitious, the current market dynamics make it a plausible scenario. As investors continue to recognize silver's potential and allocate a portion of their portfolios to this precious metal, the upward pressure on prices is likely to persist. Stay tuned for more insights and updates on the silver market. Don't forget to subscribe to our channel for the latest analyses and expert predictions. And remember, while the potential for significant gains is exciting, always consider the risks and do your due diligence before making any investment decisions. This is not financial or investment advice, but rather an exploration of the compelling factors that could drive silver prices to new heights. Thank you for watching, and let's see where the silver market takes us next.